Hello and welcome. The tax landscape is always shifting, and the team at ProTax Accountant have put together this guide to help you get ahead. We're going to be talking about the big changes coming to UK Capital Allowances in 2026. Really, our goal today is simple: to make sure your business can claim every single pound of tax relief it's entitled to on its assets. So, let's jump right in.
Okay, let's get right to it with a really important question. Are your business assets costing you more in tax than they should be? With some pretty major rule changes just around the corner, a lot of businesses that aren't prepared are about to find out the answer to that is a very surprising yes.
So, here's what we've got on the cards for today. We'll start with the link between your assets and your tax bill, get the basics of capital allowances down, and then we'll dive into the big 2026 shakeup. After that, we'll look at some real-world scenarios and finish up with how you can maximize your relief. Simple as that.
All right, Section 1. Your assets, your tax bill. Every single business has assets, right? From the laptop you're using to heavy machinery on a factory floor. But here's the thing. The tax rules that govern these essential items are changing, and that's creating both some fantastic opportunities, but also some risks you really need to be aware of. So, what on earth are capital allowances? Well, the easiest way to think about it is like this. It's HMRC's version of depreciation. You know how in your company accounts you might write down the value of an asset over a few years? Capital allowances are the tax equivalent. It's the official way you get to deduct the cost of those big purchases from your profits, which of course means you pay less tax. It's a hugely important tool. Okay, let's move on to the basics. Before we can really get into what's changing, we need a solid understanding of the tools you can use right now.
Right, take a look at this number. £1 million. This is a big one. It's the current limit for something called the Annual Investment Allowance, or AIA for short. And honestly, it is a massive benefit. It basically means that most businesses can buy up to £1 million worth of qualifying equipment and deduct the entire cost from their profits in the very same year. That is some serious tax relief.
So the big question is, who can get their hands on this? Well, the good news is, most of us can. We're talking sole traders, partnerships, limited companies. You can claim it on a whole range of kit. Computers, machinery, even vans. But not cars. That's a key exception. That's not all. Here's where people can go wrong. You have to be aware of the restrictions. For instance, if you're part of a group of companies, you might have to share that single £1 million allowance. And a lot of people just assume every business qualifies. But some more complex structures, like a partnership with a corporate partner, can't claim it at all. So you've got to be careful.
And that brings us neatly to the main event, the big 2026 Capital Allowance shakeup. Honestly, this is where getting prepared now becomes absolutely crucial for your business's bottom line. Stay with me, the next point might surprise you. Okay, this table really lays it all out side by side. Now, what's really interesting here is what's changing and what's not. You'll see full expensing for companies, that's staying put, which is fantastic news. But the two really big headlines are right here. First, the main writing down allowance rate is dropping. And second, we're getting a brand new 40% first-year allowance. Let's dig into what both of those actually mean.
So, first up, that reduction. Starting from April 2026, the main rate for the writing down allowance, the WDA, is getting cut. It's going from 18% down to 14%. Now, why does this matter? Well, for any asset that doesn't qualify for that 100% relief we talked about, it means the speed at which you can get tax relief is about to get a whole lot slower. You'll still get the relief, but it'll be spread out over a longer period.
But it's not all bad news. To balance that out, the government is bringing in something pretty powerful. From the 1st of January 2026, there's a new 40% first-year allowance, or FYA. This is a big deal. It lets you claim a massive 40% chunk of an asset's cost right away in year one. The leftover 60% then just goes into the regular pool to be written down at that new 14% rate. It's a really nice upfront boost. And this new FYA, yeah, it's a bit of a game changer for some. It's not just for limited companies. Unincorporated businesses like sole traders and partnerships can use it too. And here's the really crucial part. It's available for assets that you buy to lease out. Now that's huge because the leasing sector often gets left out of these top-tier allowances. Of course, there are always rules to remember. It doesn't apply to second-hand assets. And, you guessed it, not for cars.
Okay, time for a quick pro tip. We keep saying no cars, but there's a big exception. The government is still pushing hard on the green agenda. So, that fantastic 100% first-year allowance you can get for brand new zero-emission electric vehicles and for installing EV charge points, well, that's been extended to April 2027. So if you've been thinking about getting an electric van or car for the business, the tax incentive is still absolutely brilliant.
Right, so that's the theory. But let's see how this all works in practice. In this next section, we're going to make these numbers real for a typical UK business.
Okay, let's picture this. We've got a freelance career in London, and she needs to buy a second-hand van for her business. It costs £20,000. Now, because it's used, she can't use the big 100% allowance or that new 40% one, so she has to use the standard writing down allowance. If she buys that van in, say, March 2026, she gets to claim at the old 18% rate. That's £3,600 she can write off against her profits. But if she waits just a month and buys it in April 2026, after the change, the rate is only 14%. That means her relief drops to just £2,800. That's a difference of £800 in her pocket in year one just based on the timing of one purchase. It really shows how important planning is.
Now let's look at how this builds. We're moving on to property, fixtures, and buildings. And I'll be honest, this is an area that's commonly overlooked. It's a bit complex, and because of that, a lot of businesses end up leaving a serious amount of tax relief on the table.
So, the first thing we need to get our heads around is the difference between fixtures and chattels. It sounds a bit technical, but it's pretty simple. Chattels are just all the movable stuff inside a building. Think desks, chairs, carpets, that coffee machine in the corner. You can't claim these specific property allowances on them. Fixtures, though, are the items that are literally fixed to or part of the building. We're talking about the heating system, the wiring, the toilets, air conditioning, all that integral stuff. That's where the hidden value for capital allowances lies.
And it's not just the fixtures. There's also something called the Structures and Buildings Allowance, or SBA. This is for the actual structure of the building itself. So if you're constructing a new commercial building, doing a major renovation, or buying a new one, this allowance lets you claim relief on those costs. It's a much slower process, but over time, it's incredibly valuable.
And this brilliantly illustrates the long-term nature of the SBA. It's not a quick win. You claim the relief at a steady 3% each and every year. That means you'll claim the entire cost back, but it's spread out over a period of 33 1/3 years. It's a long-term, reliable tax deduction that just keeps on giving.
Right, listen up because this is an absolutely critical pro tip. If you sell a commercial property, you can't just walk away. You and the buyer have to formally agree on how much of the purchase price is for the fixtures and fittings. This is done with a legal agreement called a Section 19(8) election. And here's the kicker. You have a strict 2-year window from the day the sale completes to get this filed with HMRC. If you miss that deadline, those allowances could be lost forever for everyone involved. It is a massive and very common pitfall.
Okay, we have covered a lot of ground. So for our final section, let's pull all of this together. We're going to create a simple action plan for you to help you get ready for 2026 and make sure you're maximizing every bit of relief you can.
Look, the best way to make a good plan is to know what the common pitfalls are, and these are the ones we see trip people up time and time again. First, just bad record keeping. If you're claiming the SBA, you need an allowance statement. No statement, no claim. It's that simple. Second, missing that 2-year deadline on a property sale that we just talked about. Third, disposals. If you sell an asset that you claimed 100% relief on, you might have to pay some of that tax back. It's called a balancing charge, and people often forget about it. And finally, the biggest one coming up, just not thinking ahead, not timing your big purchases to take full advantage of that new 40% allowance from January 2026.
So I'll leave you with this one final thought to mull over. These changes are coming. They are going to create winners and they are going to create losers. The only question is, with everything we've talked about today, is your business positioned to save tax or are you going to lose out? The difference really is going to come down to one thing: planning. Now, of course, please do remember that the information in this presentation is for general guidance only. It really shouldn't be relied upon for making financial decisions for your specific circumstances. For that, you'll need tailored advice. The experts at Pro Tax Accountant, who put all this fantastic information together for us, are absolute specialists in capital allowances and all things tax. If you want to make sure you're in the best possible position, get in touch with them. Their details are right there on the screen. Give them a call or drop them an email.